previously on the Elevate With Us podcast.
Welcome, Barney Stewart.
Thank you, Tanya. Pleasure to be here.
Yeah, I'm so excited you're here because I think our story is really interesting. You know,
I played basketball with a couple of guys, and there was a position open in their firm, and he goes, "Are you interested in being an insurance wholesaler?" I said, "Sure."
And you hadn't done insurance.
Like,
you hadn't done it before.
Oh, no, never. My rule of thumb is if the second a client commits to a house, send them to me.
Right. No, and I, you know, a big theme of what we've been talking about is that, and I say this all the time, is in real estate, you're in the relationship business.
Right.
And that's what you're building as well. You know, you just invited, 12,000 realtors out for coffee. But it's really important because, if you're used to selling in, let's just say, 𝗥𝗢𝗃𝗃𝗃, and then you have a customer in San Marco, and you haven't really sold there. It's not that you can't sell there as a realtor, you shouldn't, but there's going to be different issues that are going to come up. And a lot of it's going to be because it's an older home, and it might be a home from 1915, and it might have a new roof. It might be newly plumbed. It might have new HVAC, but it might have cloth wiring. And you might not know to look for that. And then all of a sudden, you get the home inspection report, and you're like, oh, shoot. This bad boy needs to be rewired. And you don't have a relationship with a great insurance person to help you work that out on what that looks like for the customer.
Right. The biggest difference, I think, in the advisory approach we take is if you referred me to that buyer, I'm calling you first.
Right.
And I'm going to say, hey, Tanya, this is something that is this negotiable? Is this something we can talk about? With this deal, I've referred to this client a couple times from yesterday. He's committed. His 10-day inspection period's over. He can't negotiate anything.
This is the
Sawgrass Country Club home. It is what it is now, and I'm trying to figure out the pain points, which things are going to be acceptable to him, which are not, which are doable, which are not, because we have to get something to his mortgage broker today.
Oh, I was just going to ask if there was a mortgage on it.
Yes, there is a mortgage on it.
So
of course there is.
Of course. So something you didn't disclose that I know that we'll share with everyone is it has a non-permitted roof.
Correct.
So I asked Barney, can we get a permit? Can we get an inspection through the county to verify the age and there's really nothing. Does a WinMIT help with it?
The WinMIT, whoever did the WinMIT inspection didn't put the permit information. So here's what I did.
Oh, geez.
I called the listing agent, and the listing agent has sold it to the last 3 buyers.
Oh, wow. That's unusual.
I called Sawgrass Country Club to see if they had the owner had gone through the approval process, because you have to go to the association when you do the roof, and they had not. Anyway, the realtor knew exactly where the permit was. He had it. He sent it to me. We've got it. So there's sometimes just extra work that we need to do in these relationships that we're building that I think we should do.
Absolutely.
Because the customer doesn't know what to do. And so often I'll call the listing agent and say, hey, can you help us out here? Can we get something? Same thing with flood insurance. Flood insurance is now transferable. If you're buying a house near the coast, you do not want to go out and get a brand new flood policy anymore. It can cost, the flood insurance on this particular home was $8,500 a year. However, if we transfer the seller's policy, it's $650. So
wait, whoa. $650 versus $8,500? I mean,
they were grandfathered under the prior FEMA rating guidelines. And
wow.
We don't want them to give that up.
No.
We want the next buyer and the next buyer and the next buyer to keep that. So these are all things that I'll fill the realtor in on regarding a home that's in a flood zone. And by the way, guys, every house is in a flood zone. So
I was just going to say, we should probably talk about flood zones because people get so excited. They're like, oh my gosh, it's in flood zone X.
33% of the floods happen in X. And a lot of X's from 3 years ago are now A's and AE's.
So what are the differences? So X means you're not required by FEMA or whatever to carry flood insurance.
Yeah.
But A is the highest risk?
No. So A used to be the highest risk.
Oh,
now we have.
I'm learning.
Now we have the V. So
V is the highest risk?
V.
How'd they get from A to V?
I can't answer.
I mean, like, what about B? What happened to all the other letters? And like X, like A to X, I get it. Like A's bad, X is good. V sounds great. It's near X, just saying.
It's close. They went back and forth.
Right.
Anyway, so we run a flood zone determination on every house.
Okay.
Every single house. Because we want to see what it is and what the trend has been. Like, if it was an A zone home 2 years ago and now it's X, what changed?
Right. How does that change?
FEMA re-rates every house periodically. The last big re-rating that was done in Ponte Vedra was 3 years ago.
Right. It was. Yeah, I remember it.
Yeah.
A
lot of people and like Neptune Beach, Atlantic Beach, Jax Beach rates shot through the roof. Some
Really?
of TPC rates came down.
Came down.
But
Fascinating.
it's very relevant, and that puts my finger on the pulse of a neighborhood.
Sure.
So we have a feeling of what's going on. So just because the person that is selling the house was in flood zone X does not mean that the buyer is still in flood zone X. So we can't make that assumption. So we look at it with every house. Customer declines it. I understand that because it's getting expensive. But by the way, the reason insurance gets expensive is because it's used a lot.
That makes a lot of sense.
So flooding occurs throughout the United States. We're on a peninsula.
Right.
With a very shallow water table.
Correct.
We flood. And so it's just a conversation that we want to make sure they're aware of. And if they decline, we don't strong arm them in anything. It becomes part of the risk management decision.
Right. So it's because you're consulting with them and having a conversation and advising them, you can say, hey, I get you're in flood zone X, but your neighbor flooded, or whatever it is. You're just giving them information so that they can make an informed decision, because they might say, ooh, I feel like my risk might be higher than I thought. Maybe I want that as a part of my policy.
But maybe the next person doesn't.
And obviously, because everyone has a different risk tolerance.
Exactly.
If you could figure that out, wouldn't it be great?
And it's so easy. You just gotta ask.
Ask questions.
And one misnomer to everybody that's on the call: you cannot insure docks for flood loss. If you have a
so if you're on the river,
extends over water,
yes,
you're completely on your own. If there's a hurricane event, a weather event, king tide, that dock gets washed away, ends up in the neighbor's yard, half a mile down the road, you can't cover it for flood loss.
Interesting.
So anyone that buys a house with a dock or any appurtenant structure over water, you're on your own for that one.
Interesting. So I always find it, we live in an area with a lot of water, right? It's part of what people love about living here is we've got tons of water here, right? You've got the intercoastal, you've got the river, you've got the ocean, is when you meet customers that want to live on the river or what
doesn't want to live on the
river. But then they don't want to carry flood insurance.
Right.
And I'm like, when I can figure out that reasoning in their head, or they're like, hey, I'm worried about flooding. I'm like, yeah, obviously. I can see the water. I can spit there. Like, of course you're worried.
Yeah.
But then they're like, oh, I don't want to live there. But I want to live on the river. And I don't get that. That seems to me like, well, obviously, if you're near the water, there's a higher chance of flooding than if you're inland.
It's funny, and I may get heavily scrutinized for this.
I'm so excited. Let's go.
If you drew the state of Florida and you draw an outline of it, not the northern border, but all the way from the Panhandle around and all the way up here to Northeast Florida, where does most of the damage take place from hurricane loss and flooding? Most of it is within a mile of the coastlines.
Sure.
All right. I'm of the opinion that folks that have owned property historically in those areas have paid way too little for insurance.
Because they've flooded so often.
They flooded so often, and they have hurricanes so often. Now, this $115 billion that was paid out in Southwest Florida, are people still going to move there?
Absolutely.
Absolutely, and they're going to buy houses there, and they still buy houses there, and they still own a house. Now, I just talked to a client 3 days ago who lives on Sea Glass off Ponte Vedra Boulevard. All those homes were built in 2020. So we insured that home for $2.8 million for $6,000 a year. She was being dropped by her prior insurance company. So the type of home, if you have somebody that's going to start shopping for insurance, we're happy to have a dialogue with them and coach them through how this process works.
Absolutely.
But people will continue to live near the coast. And for the first, like we see premiums in Palm Beach County of $25,000 and $30,000 a year. We are not far behind.
Oh
We're
my
starting
God.
to see
Starting to
places
see it
like
now.
Plantation and Marsh Landing, and with premiums in the $15,000 to $20,000 range.
Wow.
And we just have to be understanding of that. And people will say, well, you know, I don't want to spend this much money. I said, then don't live there.
Right, you have a choice.
You have a choice.
Absolutely.
If you're going to live there, you just have to realize that everything is wonderful except one thing.
Water.
And we can deal with that, but we deal with it the right way. We
Right.
deal with it the appropriate way. And
Well, it's being transparent and understanding, and obviously, if they don't like the cost, they could have less coverage. Is that how you?
well, it all depends on if they've got a lender, because the lender's going to dictate some of that. But most
Sure.
people that own, you know, multi-million-dollar homes have some cash.
You would hope.
Yeah.
You would hope.
And so they're generally okay with higher deductibles. They're generally okay maybe not insuring their contents to full value. They're
Right.
okay making certain decisions that this person over here buying in 𝗥𝗢𝗃 may not be comfortable making because of their circumstances. Single
Right.
mom, you mentioned that a little bit earlier.
Well, yeah, we were talking about how I think that there's a misbelief that people don't want to pay a premium for something great.
Right.
And it doesn't matter. And you can't assume because someone's buying a $300,000 condo or a townhouse or their low price point means they don't want top-notch coverage.
Right.
You just can't assume that. Bad word to use. You have to offer it to them and say, you know, what does this look like for you?
Right.
How much cash do you have? Do you have enough money set aside for in the event that you have to use your deductible that you have it? And if they say no, then you have to make a plan fit for them. People are okay to pay for time. It depends on their life circumstance. You can't make a decision for them, which
Right.
I think happens with other insurance
if you
agents.
get a quote in an email and you've never talked to the advisor, it's already
buyer
happened.
beware.
It just happened.
Yeah, buyer beware. Because you just said there's going to be 20 to 40 questions, and if you basically just gave them your name and your address, that means they probably answered 38 questions on your behalf.
Yeah. So I don't like the word quote. Quote is used frequently.
Oh yeah, I'm
in
going
our
to give you
industry.
a quote. Yeah.
Yeah. So a quote is, I haven't spoken to you. I can look up your address. I can go to the property appraiser site. I can see it. I can see what your house looks like.
Okay.
But I have to make a series of assumptions. I have to make an assumption about your insurance score. I have to make an assumption about your deductible. I have to make an assumption about, do you have a dog? Do you not have a dog? Because if you have a German Shepherd and that insurance company doesn't accept German Shepherds, then we're done.
That's real.
That's real.
There
we have
are
about
really
14 dog breeds that are unacceptable.
And so if you have a German Shepherd, let's just say, there's a chance you can't get insurance.
Yeah, well, I don't want to badmouth German Shepherd
No,
owners.
but
It's
there's
just
other dog breeds.
Some companies don't like
Like
it.
Chow Chows are on there too, I
Chow-Chows,
believe.
Rottweilers, Great Danes are on some lists.
Great Danes are?
They are. They're there.
Oh, they're
But
just such gentle giants.
They are, but they're big and they
cute.
knock people downstairs. And they
It's not because they bite people.
Exactly.
It's because they're goofy.
The average dog claim in Florida was $60,000.
What?
People get attorneys. We're back to our litigation comments that
I'm
we made a little bit
sorry.
earlier.
So your homeowner's policy covers against dogs, and if your dog knocks someone down the stairs or whatever, they could stake a claim. That's why they do a claim against you, and on average, the average claim is $60,000.
For a dog bite.
Darn,
So we need to know these things. If you get a dog,
you're supposed to tell.
you're supposed to tell your insurance company.
And you're not supposed to have trampolines.
If you renovate your house, well, that's a whole nother conversation, which I do want to touch on if we have time.
Let's do
There's a term that I kind of like. It's kind of tongue-in-cheek. It's called an attractive nuisance.
An attractive nuisance.
An attractive nuisance.
It's like an oxymoron.
Yes, it is. But it attracts kids. So let me just give you a list of things.
I love this.
That are challenging.
Yeah.
Number one, all these electric bikes that we see in 𝗥𝗢𝗃, liability magnets. Like,
They're an attractive nuisance as well.
they're an attractive nuisance.
Wow.
Golf carts can be an attractive nuisance.
Wait, are we supposed to tell our insurance provider we have a golf cart?
If your kids are driving it around 𝗥𝗢𝗃 and they hit
No,
somebody,
no, sir.
they need to know that
I
there's a
drive
golf
it.
cart.
Yeah, okay.
Yeah, but plenty of kids. I see plenty of 14-year-old kids driving golf carts.
Come on, they're like 11.
Maybe.
I mean, I look at them, and that's when I know I'm old, when I can't determine kids' age.
Right.
I'm like, how old are you? You don't look like you could. Are you in 3rd grade?
Yeah, so attractive nuisances are tree houses, swimming pools. Swimming pools have to be fenced. If they're not adequately fenced according to code, that can be a problem. Tree houses.
Trampolines.
Swing sets.
Swing sets, of course. They're an
All
attractive nuisance.
You
Wow.
know? And then some other things that can be liability concerns, vacant homes. You know, if you aren't going to live in a home for 30 to 60 days, you're supposed to let your insurance agent know.
So, like, if you sell your house, you move to another home, and you leave it vacant for a little bit, you're supposed to tell your insurance provider?
Well, there's a question on the application that says, is your applicant going to move in within 30 days?
Oh.
Yes or no. So you can't get the insurance if you say no. So all those are yes. And so if they're renovating,
Right.
they need to know, because if the insurance company goes to inspect and they see a renovation going on, they're going to drop you. And they drop you with 2 weeks' notice. And you can't get insurance while your house is going under renovation. So we have to insure it to a renovatable
If
process.
you're living there while being renovated, does that count?
No, that's
that's
perfectly fine.
acceptable.
Yeah, it's
Got it.
typically okay.
Okay, interesting.
Unpermitted rooms, we talked about. We talked a little bit about docks, lots. We actually have liability problem if somebody's buying a home on the water and their lot extends into the body of water, because they own the property that is in the water. So if somebody's swimming in that pond and they drown on that lot line,
oh my
you
gosh.
better pull them over to the side.
Right. No, listen.
That's
Let's
tongue in
make
cheek,
sure
of course.
no one is swimming in ponds in Florida, because you're going to get bit by a snake or eaten by an
No,
alligator.
but kids fish in the ponds all the time.
And they fall in the water.
If they fall in the water, it's a
Oh,
whole
wow.
different ballgame. So when we run those flood zone determinations, we want to see if their lot line extends into the pond.
And I bet you a lot of them do.
Most of them do.
I'm curious. I'm going to have to go look at some surveys. There's some properties I sold. I have no idea, because it can be very desirable. A lot of people, which I think is funny, they consider the retention ponds, or what I call fake lakes,
Right.
to be a water view.
Well, I mean, it's better than not having
I mean, I get it's water.
Right.
But I never thought about that you own a part of that water, and then you could be held liable for nonsense that happens there.
Correct.
Oh, goodness.
Somebody's on a jet ski, if you're on a lake, and they happen to hit a piece of debris that's on your lot. I mean, all these things come into play.
Right.
And the last one, which we really haven't talked about, if we have time,
Yeah.
is the insurance industry.
Let's
So
do it.
Right now, there are 14 companies in liquidation, meaning that they had less than ample assets to cover the liabilities that they took on.
Wow.
I don't want to get into specific names. There's two major large firms.
So
that
basically, you're saying they have policies that are out, but the claims exceeded that, so they're like in bankruptcy like they're in the red.
Yeah, so
They're negative.
So the Florida Department of Financial Services evaluates the financial health of companies, and that's where
Wow.
we get these ratings.
Okay.
So what'll happen is, like, one of the most major firms is non-renewing the client I was talking about a little earlier, off Sea Glass. The option they gave to them is a brand new company that has no footprint in Florida whatsoever.
Yikes.
And if we're not informed, that person may look at that and go, oh, well, I have insurance, everything's fine.
Sure.
Now, this particular person has tremendous financial assets and does not want this type of company protecting her $2.7 million home.
Sure.
So we take that into consideration, but we also take everything into consideration. So anyways, there's 14 going in liquidation. If you go to the Florida Department of Financial Services, you'll find almost 100 firms that have been liquidated, meaning they were shut down by the Department of Insurance.
Wow.
And the State Florida Guarantee Association picks up the exposure. One of the reasons that chasing the cheapest deal is not always viable is, imagine this, all right? So imagine Company X is offering the least expensive rates in Jacksonville at this time.
Okay.
Where are all the people buying homes going to go?
There.
What will happen to their, it's called a risk management exposure, is all of a sudden, these, let's call it a $2,000 premium that's insuring an $800,000 home.
Okay.
All right. So now all of a sudden they take on 10,000 new policies and we have a wind event. Or that company is most likely to potentially have rate changes.
Of course.
Because they were loaded up with policyholders, and their reinsurers and the Florida Oversight Committee that looks at may decide, hey, you've got too many policyholders. You either have to raise your rates or you have to cancel a number of policies to get within the framework of acceptability.
Wow. It's highly regulated.
Highly regulated.
Not
as regulated as I think it probably should be.
Well,
but it is.
Yeah.
So
Interesting.
Well, the name that's on that policy,
ABC Insurance Company,
is extremely relevant. And
wow.
we do due diligence on that. We want to understand their risk profile. We have their marketing reps in our office. I will call their financial team and say, hey, tell me about the financial health of this firm before I make that recommendation.
Right, because because you're recommending that company. So if you're recommending ABC Insurance, they've got great rates, and then they fold.
That's potential exposure on us.
Yeah, then, because I'm sure like real estate, you like to work by referral, right? If you work with John Smith, you hope John Smith tells his neighbors and his uncle and his dad and all the people that they had a great experience with you. But if they fold and they get dropped, that taste is not the flavor they want.
Now let's imagine you get dropped with a 15-year-old roof. Mm-hmm. So now not only are you dropped, but you have to put a roof on your house to get insurance. Yeah, you may not be in a position
to put one on
to do that. So the conversation I may have with you is, hey, Tanya, you have a 12-year-old roof. Just know within
Which is true, everyone. I have a 12-year-old roof.
Oh,
just
do
so
you?
you know.
Oh,
yeah, I literally do.
I did not know that. That sometime the next 3 years, this is going to become a matter.
A problem.
Well, it's not a problem. It's just an awareness you need to have.
I love that. That's because that is the belief in real estate is 12. I think a lot of agents operate under 10 years. At 10 years, they are warning. And the same with.
It's not a bad idea.
And the same with water heaters. At 10 years, they start kind of being freaked out about it. But I think saying just being aware is probably a better verbiage to use than to be freaked out and say you're not going to get insurance, you're going to get dropped right after you bind your policy and stuff.
Well, I understand the intention of that message. The intention of the message is good.
Yeah.
It's a well-intended message. But don't give somebody bad news without giving them a way to solve it. It's a little bit like going to the doctor and saying, I'm sorry, you've been diagnosed with cancer. And then they leave. So,
bye.
So as an advisor, how I view myself as a trusted advisor, I might give you not great news, but it's not. It's neither good nor bad. It's just information. And if you want this house, then let's go through this process to make sure it's taken care of in the most reasonable manner. And we may have to do a couple things over the next 2-3 years. I'll never forget one of my most challenged customers, which was also fun, was somebody that bought in Marsh Landing. We had to get her 4 insurance policies in 2 years.
Because she kept getting dropped?
Her renovations kept taking too long.
Oh, wow.
And her lender expectations were different. And then she refinanced. And then it was just,
wow.
It was a comedy of errors. Now, she was frustrated. But I just explained to her and her husband, I said, guys, I went to their house and I said, this is a process. You have a process going on here at your home. We have to take it at a snapshot at a point in time. All right, so when you bind an insurance policy for August 25th, it's based on what's going on August 25th.
Right.
If something else is happening in December.
Changes everything.
If you all of a sudden decide to put an addition on, I need to know that.
Wow. So, something that I'm learning is that we probably don't talk to our insurance advisor enough. I've probably never told an insurance advisor when I got a pet, like ever. Like I have a greyhound. I wonder if they're on the list. They're kind of big. They're good. Yes.
Yeah, they're good.
Get a greyhound.
Get a greyhound.
Yeah. So I've never thought about that, the associated risk with pets. Or obviously I would think when you put in a pool in, most people would reach out, but I don't know. I just made an assumption. I know better. So if you could leave us with like one big piece of advice, other than call you as a realtor, have you in like the Rolodex, I just aged myself again, but have different people you reach out to in different circumstances. You might have a preferred insurance provider right now, but they might not mesh with your customer.
Right.
So what can you leave everybody with? One last thing.
The thing that I would leave everybody with is insurance is not a commodity.
Yeah.
All right. As consumers, and I started having this talk maybe 12, 15 years ago. If your significant other is going to take you out to dinner,
okay,
you're going to go to the cheapest place. If you're going to buy a dress for a wedding, you're not going to go to the cheapest place. When you buy a car, you don't buy the cheapest car. As consumers, we value shop.
Sure.
Most things that we consume, all the way from food to fast food to homes to it. All right. I think we can all agree that the home is one of your biggest assets.
Yeah, generally. Yep.
Why do we take less time to protect it than the time we take to buy a pair of shoes?
I mean, you're so right. I mean, that's really powerful because like I said, I do not talk to my insurance agent. I've never told them about any update I've ever done. I mean, not that I do a lot, but that's really value added. So Barney,
that's the biggest thing I can leave everybody with.
It's really amazing. I so appreciate you coming on.
Absolutely.
I love seeing you around 𝗥𝗢𝗚, and I love that you're doing this still because you are very good at it and you take time. It's appreciated.
And thank you for helping me find my house, which I still love.
I know, it's awesome. It's awesome. Well, thanks again for coming on.
Absolutely, anytime.